This is the Meerkat in for D7 with the broad market review for January 21st, 2016. Well, it's been a turbulent time here on the markets. Let's take a look at today's numbers, and then let's look how it fits into the charts in the longer term basis. First of all, we've got the SPY was up 0.56% on a very volatile day. We have the DIA up at 0.63. The Qs were up 0.1%. That's right, 0.1. Basically neutral. And the small cap Russell was down 0.23. Look at the next one here. Bank. This is a big one. Minus 1.48%. That is very bearish, folks, when an otherwise mixed day. And then we have the VIX down 3.6%, down to 26.69. More on that in a few minutes. Then we had silver and gold. Silver was neutral. Gold was up just a fraction, 0.12. Oils was up today about 3%, 3.8%, and it did go back up above $30 for a while and then pulled back a little bit after the later afternoon. Dollar down slightly, 0.1%. Trend trade, we're at dead neutral, so no trend trade today for Grok grads. Well, folks, let's take a look here at the S&P 500, represented here by the SPY, the ETF on the S&P. This way we get a little bit of volume involved. So again, here's last year. We finished the year in a symmetrical triangle. This purple line here represents the opening from 2015. This line here is the opening of 2016. You can see we just lost a fraction. And what's it been since then? Bam-biddy bam, 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 right? Nothing but down. But yesterday, we had this hammer here, and we closed back above. Now, this turquoise line here is the swing low from 2014. So the DES had drawn in and analyzed yesterday, and we closed there. Now today we went up and we closed right here above that line again. So we have a slight follow through on this possible reversal candle here on the markets. As I told the subscribers to the Grok Stock Picks V newsletter this weekend, a one-day bounce does not constitute a trend reversal. So we need to watch for follow-through here to see if we have found a low or not. If we look at the DIA, the Dow Jones Industrial ETF, it is looking very similar. And here's the Qs here, and looking similar, but look, it basically closed and opened at the same spot. Small caps, it did, but it didn't quite clear this one here in the close from yesterday. So we're looking for follow-through on the markets. Let's take a look here at the daily chart on oil. Des just referred briefly to this yesterday. We are in a falling wedge, which is a bullish formation, and that if it breaks out above this area, it's a possible reversal and possible long situation. Oil did that today. Again, it broke again above $30 on the oil futures and then back down again on the WTI. But right now, here it is. It could close above that. So tomorrow, if we get some follow through to the upside about that, we may be starting to reverse in this direction here. We are at a miserable level for the oil companies. As one executive said the other day, when we were at $50 a barrel, it was bad news for the oil industry. At $30 a barrel, it's a death march. We need to get those prices up a little bit so that we can keep our oil companies liquid. All right. Next, let's take a look here at the VIX. This is the weekly chart on the volatility index, which indicates the fear in the markets. Are people buying a lot of protective puts for their longs? And this is when it spikes up. Here it goes above 20 here, then the markets become more volatile. And if you look back here over the last year, we've been in a very tight range here between 20 and 12, which is nice and calm. In August, kaboom! Look at that, went all the way up to 50. This is weekly again. These are weekly candles. And now here, yesterday we went boom all the way up here to 32, and then pulled back down here now in the 26 area. We are still in a volatile range. Anything above 20 is very volatile. So expect the markets to be jumping all over the place. Remember, cash is an okay position to be in right now, especially if you're in a retirement account and you cannot short the market. You can buy bearish ETFs. For example, SH. SH is a bearish ETF 1-to-1 on the S&P 500, just like SPY is 1-to-1 bullish the S&P 500. And again, that's just a way to hedge your accounts, especially in those retirement accounts where you cannot go short. This is the Meerkat. Hey, just remember that 80% of trading is all mental. The other 20% is mechanical. Trade well.